Good evening, all. Welcome to Billionaire. Hope you guys had a safe expiry. So I had informed you that until unless the range is broken, market won't be able to provide you big moves. So if you see this early morning opening candle was a very sharp reversal. It came to S4 and near S4 I had marked that we have a strong buying area here. So and exactly that buying area went up above S3. It is a buying area. From S3 it went to R3, which was a selling area. R4 is the next selling area. Market came down, went up. Now, why here market went up? So you need to understand the importance of price action here. So this was a reversal pin bar after a sharp reversal from the top. And as said, always the reversal pin bars, morning star, evening star, engulfing candle or piercing pattern, dark cloud, all these things carry a lot of weightage when they are formed near key resistance or support level. It might be pivots, it might be Fibonacci, or it might be trend line or normal price action support and resistance. Now this, after this, we had a doji. What does a doji informs? Doji informs indecision. And after the doji, market went in one direction. Suppose it went again, failed and came back, then this region will have less importance. But after the doji, buyers made a decision to take the price up and price went up. And when this was coming down, exactly this wick to this body was again a buying area. That is the reason, although here it broke and touched the buying area of S3. S3 is what? Buying area. Market gave a reversal and then in the last half an hour tried to move up. Now this is how you mark the important key resistance areas within the pivots. Remember, market is a game of probability. So every trade is a risk. So these, what does these pivots do? Uh, does these pivots means Brahmavakya that it will always work? It is absolute in terms of trading? No, definitely not. That is the reason we tell market is a probability. But pivots gives higher probability areas. That's the reason why these work. So even in this sideway market, suppose if you follow Camarilla pivots, considering S4 is a buying area, S3 is a buying area, R3 is a selling area, R4 is a selling area, you would understand. Now within this, if you understand these buying and selling areas, then you would not fail to notice this area as well. Wick to body, market tried to push back, came down, doji, and the reversal pin bar, then market decision. So you need to identify where market has decided, not the small areas where you have a significant moves. From R3 it came back to S3 yesterday. So this was the same area where market today went down. If you anticipate this, so this would become a high probability area within the pivots. And then you know, once you have taken a trade here, because this is a high less risk area, not this area, market can come down and move up. But this, after this red candle, the next one is the less risk area, because this is formed in the previously established resistance area. And you know, here market went down. That is why again people will think to take it down. And what kind of market we are in? Last 3 days we are in range bound market. This was choppy, this was range, this was range. Even in choppiness, if you follow the pivots exactly, S4 buy area, S3 buy area, R3 sell area, R4 sell area. Beyond R4, beyond S4, they are a breakout area. You would understand, you would never go wrong. So it is very important for you to understand the importance of these areas and think in one direction, because here it failed to break S4. If S4 was broken, I told you below S1 standard pivot, S1 standard pivot, above R1 pivot or previous day high, anticipate a breakout area. Hope this helped to understand. All right, this is the area now. And most of the, what kind of price action we had here? Now this one closed at 17,260.95. This one opened at 17,260.85, but it tried to push up and came down. Not a a dark cloud pattern. I was looking for a dark cloud, and watch what happens next. Once this is established, second time market goes here, the 2 doji forming here is the sign. Yes, market came down, today was expiry, again it came up, but that is how you have to trade. I took a trade after this today. If you have seen 17,200 CE, I gave a call here, waited almost till R3. So I exited here, I believe in this area or in this zone, in this candle. So from here, understand, after the decision was made, 17,217 till 17,247, market gave only 10 points. And after reversing from here, I had entered at 57, exited at 67, and market went to 72, came down to 61 with this push. I think this push and this push, it went from 67 to 74. That's all. This push had a 74, and then it came back. And what do you see here? Two dojis. Now, what is the rookie mistakes most of the traders do? Most of the traders, neither they identify. I know price always does not come to pivot. Once you miss, you have to take the risk at these established decision making areas. Now this is a decision making area. You have a pre-established area. This is also an important turning point. What do you understand by pivot? Pivot means important turning points on any time frame. Here, what happened next? Same thing. Suppose you missed a trade here. If you have taken a stop loss, you know this is a supply area. You should enter here, no matter what, how slow it is. What should be your target? Either the next pivot or the next resistance area. In this resistance area, you have two dojis, and then a decision is made with the small bodied red candle. Then take it. What should be a stop loss about this? Whether it is 20 points, 30 points, it's up to your risk appetite. But as said, every trade is a risk. If you're taking a trade here, it is a high risk. Most of the people want to see red candles, and they would have entered here just to see market has reversed. And then they will exit and they will blame the market. But every trade is a risk. They don't understand they're taking a huge risk here. In fact, one of our what do you call, channel member, after I gave a call here, he had entered at 68 or near this. Sorry, here this was the, not this one, this 68 when I had exited. I told him that it's a very high risk area because of this thing. Hope you understand what I'm explaining. So I told him it's a very, very risk area because he was chasing price near the resistance area. And after that, in a pullback, obviously it went to 74. If he had not exited immediately, it came down to 40s, 50s, 30s. So you need to be really fast while trading with option, and you need to take a high probability trade. What are the high probability trade here? Even if this breaks and hits your stop loss, after you see this green bar, you're entering here. What is, you have to wait for this 5 minutes. What is your stop loss? Below this supply area. From till here on an expiry, maybe you may have a 20-point stop loss or 15-point stop loss. Yes, that is a risk you're taking. But if you're taking a risk here, it's a huge risk. Maybe you may try to scalp 1 or 2 points, but still it's a huge risk because you are trading not to scalp 2-3 points and feel happy. Every trader wants to make big money, and if you want to make a big money, you have to take a high probability trade. That is a quick summary and Gyan. Okay, let's see how tomorrow will be. Right, I'm going to close this. First, you need to understand very important concepts of market. Okay, the key important concepts of market is whether it is uptrend, downtrend, sideways market. They are called as market cycles. So if you have seen Dow theory, you may see you will get accumulation phase, then what, initiation, expansion, and then what, distribution phase, and then the cycle keeps on repeating, right? What exactly you mean by these definitions? It's nothing but after a very huge what do you call, expansion. Okay, market moves inside. This is a big expansion, right? This is also kind of expansion. It's an upside expansion. Market always contracts. Upside, downside. You need to understand after an expansion follows a contraction. Now this Dow theory and all these things in a micro level might be applicable in index, but I don't follow that. But I want to keep things very simple. Some of the masters have told market moves in cycles. Forget about all the mumbo jumbos. Just understand this. After an expansion, there will be a contraction. After a contraction, there will be an expansion. Any index, whether it's Nifty, Bank Nifty, S&P, NASDAQ, or anything, you need to understand, or even for stock market. Got it? So you need to understand these terms. See here, market came here, expanded, and what happened here? Contraction. Contraction break, one more contraction, then big expansion. What do you see here? Big fall. Yes, although it has come up, this is kind of range bound. And once the range is broken, you have further expansion. And after that, what happens? Contraction, expansion. So I'm just trying to explain you. So most of your folks, if you have traded today and lost big money, I mean, hope you can get what I'm trying to explain here. Now we have an expansion, sorry, contraction. After contraction, what is expected? If the range is broken down, it can go down. If the range is broken up, it can go up. It is the most simplest way of option trading, considering you understand that every trade is a risk. So why do I keep telling you that you need to remember R1, S1, previous day high, previous day low, and along with my price action, which I explained how it works. And if you want, please, I request you, there is 2-hour long video based on my experience. I have tried to break down the market structure as simple as possible on pivots. Complete pivots, standard pivots with 4 important price action candles with Frank Ochoa has mentioned in his book. So you can go ahead, watch it, and along with that, I have explained you on option trading. You can combine the Wycraft, not exactly the complete Wycraft method, but the supply and demand. How to identify the key pivots where market had decided to go up and down, which I explained a few minutes ago. Okay, to cut short quickly, on a daily time frame, we have a doji. This doji has closed below. So this is a strong negative sign. And as said yesterday, around median of Bollinger Band 20-day, market has gone down always. Now here we have a daily pivot at 17,325. What if tomorrow market gaps up and goes above? So you have a lot of resistance here. 17,300 is a resistance, 17,325 is a resistance, pivot resistance. But I assume if 17,300 is taken out, it can go till 17,380. All right. So last day, December 31st, again, volumes are very down. Market volatility will be very high. And again, if you have seen my yesterday's video, I had very clearly told you my gut feeling is market expiry would be flat. So I had very clearly called out in YouTube. I hardly got around 100 views. Not sure if you're really watching and learning. It's not about analysis and levels. I'm explaining you the key market structure where you can learn and implement the same thing in any kind of market, any kind of trading. All right. Now, where is our R1? I'm not going to spend too much of time because I already explained. This is our R1. Sorry. Show tomorrow's pivots. They are weekly pivots, weekly high and low. This is our R1. This is our S1. Above R1, we have again where market made a decision to go down. Has it gone down? Yes, it has gone down. So tomorrow, if markets open within the range and tries to go up, you need to understand market has crossed a high level. And there's all possibility that market can come down, pull back, and then go up. Remember, market never goes in a straight direction. Suppose if there is a gap up, because SGX Nifty is above 100 points now. If there is a big gap up above R1 pivot, watch out R1 to take the support. If it is taking support, what do I mean by support? This support, something like this. If you have this support, and you need to remember that this support is nothing but previous established area, same thing, previous established area, although market is broken around same area, you have a evidence. Consider this as evidence. If you find this kind of support, double top or something, then all you need to wait for 17,286 to be taken out, for 17,300. And I said if 17,300 is taken, the next stop would be 17,380, right? Okay, let me show you so that you understand. See, this is the level. Why? This is again a big supply area. So if there's a gap up around 17,300 is taken out, I expect it to go to 17,325, which is the central pivot. I expect central pivot to be taken out and market can attempt 17,350 till 17,380, right? Yeah, these are the levels for upside. What if, and you have the pivots are standard pivots. These levels are for people who wants to see the level and trade. And how did today's level worked? I had marked these levels, right? If you see, these were the same levels I marked. See where market has resisted. I told you this is a minor resistance around 17,286, where market went down, and within the same range market is playing, within the same range. So you need to understand these levels work. And below S1 we have a gap. This gap was not filled today. The gap is still here, 17,101, and it's the same thing, 17,047, and this is a decision making area, 17,100. These are the levels you need to watch using pivots. You can use floor pivots, Camarilla pivots, or just these levels. So what is my gut feeling for tomorrow? My gut feeling is always neutral, but market will show me the direction. That is how I trade. So we are in a tight range for last 3 days, and if it's above this range, it is a high probability trade for to go ahead and capture bigger points. But since volume is down, I would advise you to at least till January 1st week trade with limited quantity with stop loss, and go ahead and try to capture the high amount of points, because I'll be going with the 300 or 500 lot size. As said, I want to close the year with the winning note without taking too much of risk. So if it breaks, I would go with 300 or 500 quantity size, which is nothing but 6 to 10 lots, and then wait with stop loss. What would be my stop loss? My stop loss, if it is above 17,286, my stop loss would be 17,273, this supply area. Suppose if it is above today's R1, today's high, because today's high and R1 is same, S1 pivot. So then I would keep this level 17,251 around 10-15 points down, because you have a lot of sideway after where market made a decision. This area will act as a crucial support. If you want me to mark this area, if price is above, okay, I'm going to remove. If price breaks above R1, what would be the support area? This range, 17,250 to 17,228. Yes, if you plan to make big money, you need to keep 20 points to 30 points, big stop loss. And once you master this, then only you can plan of carrying positions. I see a lot of people carrying positions without having any idea. Anyway, I hope this video helped, guys. Very soon I'll be bringing the price action candles video, where you can watch and learn how to trade with pivots. Hope it helped last year. Trade safe. Have a good day. Thank you.